recession. All right, let's figure out how investors should see the picture. To the Floor Show, we're joined by trader Tom Hayes and Northwestern Mutual CIO Brent Schutte. Tom, equities falling, yields spinning higher, and now the Russell 2000. Actually, earlier was the one area of the grain. I just want to check it right now. And yes, it still is there. It's up about, let's call it 1%. Much more than the rest of them. So where are the flows right now? Because when money comes out of the markets, it has to go somewhere.
That's right. What a difference a headline makes. I mean, we were just talking, the whole market was red. Money is now flowing into energy. It's been strong all day. Industrials, small caps. It's been flowing out of healthcare all day. It's been flowing a little bit out of tech, but that's starting to come back. We have semiconductors. We're starting to get bid. So the fear, as soon as McConnell came out of the shutdown, was serious, because that's what happened.
Within the hour, you're talking about.
Within the hour, McConnell came out and said, we're going to work to keep the government open. And as soon as that happened, the market completely rebounded, which shows the amount of fear around a shutdown.
Okay, so just so you guys know, so the green room is about, what, 50 feet out that way? And Tom was there, I'm here, our producer's in the booth, and he's like, you know, you have to look. This is what I'm seeing from all of my traders and everybody that I'm looking at when it comes to the flows. And so you say that the stocks, for example, the semiconductor started to come back.
Started to come back, and the VIX collapsed, which was very interesting as well. So, you know, you have a number of fears. You have the vacuum going into earnings season. People had low expectations for that. You have the seasonality. The 10 worst days of the year ended yesterday. So we're starting to move into a seasonably favorable period, but that was kind of hindered by the potential threat of a shutdown.
Okay, Brent Schutte, do you see that as part of the current bull market, a start of a bull market, or maybe just a bear market rally?
No, I think we're headed towards more difficult times in the market in the intermediate term. And so I think more about the recession or no recession question, and I disagree with Brian Monahan. I do believe there is a recession that is likely in the coming months as the liquidity tourniquet the Fed has placed in the economy kind of continues to grind that spending to a halt. And so if you think about it, to me, the most important thing is inflation. That certainly has moved lower. But I think the final frontier for inflation for the Fed is wage growth. And wage growth right now is too high. The labor market is too tight. And unfortunately, the only way that the labor market has loosened in the past is through a recession that drives wage growth lower. And that's what I think you're going to see in the coming months.
Can I just say that one other comment that Brian Moynihan said was, the Fed has won the near-term battle against inflation. I'm not an economist, but I'm not sure that anyone on the Fed would say, oh, we won, let's wave our flags and say we did it, right, Brent? But let's just say that the truth is somewhere in between. Where are you investing? Because you guys have something like $265 billion in assets under management.
Yeah, and so I think where it's important is they won the current battle. The current battle is based upon COVID-impacted inflation. And so the economy was pushed out of equilibrium, and inflation followed exactly the same path we reopened. It went from goods to services, with in between based upon Ukraine and Russia pushing commodity prices higher. That bout is over. The bout that I'm worried about is a wage price spiral, and that's where I think the Fed is worried. And that's the final frontier on inflation. And that's where I think they have to pull that down. And the only way to do so is through a recession. Look, I think the good news for investors is that bonds now yield 5.35%. I think inflation will falter. And I think that gives you a real opportunity for real value in the bond market. And so we're tilting our portfolios more towards that direction to prepare for any coming recession, and the reality that along with that recession, inflation is squashed. And at 5.35% versus a 2% inflation target, I think you have a real opportunity to add value to portfolios in that manner.
If you see value as, and I'm not sure you do, Brent, but I know Tom does, as certain products that people will continue to buy no matter what the economy is doing. Tom, you actually like Generac, and I mean, you said this well before the open today, and it's up 6.5% right now.
Yeah, so they came out at their investor day this morning, and they reaffirmed their guidance. This is one of those stocks that has collapsed. It's down 80% off of its recent highs in 2021. Why? Because they over-ordered and they overhired, like many of the industrial companies like Stanley Black & Decker. But this company continues to grow. They're trading at 14 times next year's earnings, as opposed to their average multiple of 29 times. They're basically the Kleenex of home standby generators. And as we move toward electrification, we're seeing the grids go down. We're seeing unusual weather events, and that all helps Generac. They're also preparing for the future with the battery power walls and the clean energy, and their commercial and industrial business is growing 30% year on year with the 5G rollout. So there's a lot of opportunity with Generac. It's exceptionally cheap, and we think this can be an easy double over the next 12 to 36 months.
Double. Okay, it's at 110 right now, but the PE is certainly palatable.
Correct.
Okay, and Brent, when you hear names like that, what goes through your mind if I were to ask you, how does an investor remain tactically bullish, even if you believe, which you say you do, that we will dip into recession?
Yeah, I think kind of similar story, but in a different context. I think for the intermediate term, I think there are lots of pockets of the market that offer good value. And so if you look at things like small and mid cap, which typically don't do well during a recession because they're economically sensitive, I think they've already discounted some of that. Small cap stocks, the S&P 600 trades at 12.8 times earnings that have already been marked down by about 15%. And so there is a margin of safety for those who want to invest with a longer term focus. So much more than the 12 to 18 to 24 months.
Could you buy the index? Would you say buy the index? That's what Buffett would say.
You could buy the index. Certainly, you could buy the S&P 600 index. There are also pockets of opportunity in the stock market. The S&P 500, as Tom mentioned, there are parts of that market that are cheap also. And I think value stocks in general are cheap on a historical basis. And I think on the opposite side of this, which could be fairly sharp, I think there's good news for the stock market and for those investors in those parts.
Great to see you both. Thank you very much. Tom Hayes, Brent Schutte, Senate and House leadership.